what we see as we go into 2023 is a massive step up in Tesla's business that we're super excited for.
Everybody wants to get an electric vehicle. They're wildly popular. Tesla has a backlog of 6 to 12 months. And again, they're the number one brand. And if you look even globally, if you can imagine this, Tesla just passed the Volkswagen Golf, the iconic Volkswagen car, as the number one selling vehicle in Germany, not the number one selling EV, the number one selling vehicle.
So in theory, Tesla stock could easily double just to get to the market multiple. We think Tesla's worth between $300 and $400 a share in the current market, and the market is severely mispricing Tesla at the moment.
In this video, two Tesla bulls talk Tesla, share buybacks, demand, and what Tesla stock is really worth today. Well, hang on. Producers in my ear, guys. Oh, I have a message to deliver. Apparently, there's now 183 exclusive videos and counting available exclusively on Patreon, which you can join with the card in the corner or the link in the pinned comment. What else? Oh, I also am supposed to mention that there are Tesla stock price targets out over the next decade and optional access to a Tesla valuation model too.
So Elon Musk is pedal to the metal, even in a recession, saying that we're recession resilient, maybe not recession proof. What are your thoughts, Ross? What stood out to you in the latest report?
Well, I mean, I thought it was a wildly bullish report for Tesla. If your thought process is over, let's say, a 12-month time horizon, we have amazing amounts of things happening at the company over the next 6 months, including the now launch of the semi-truck, which I'm super excited about, which also means that the 4680 cell development and the scaling of that is going better than I thought. So that's huge from a technology and product development. Cybertruck will be coming out next year, which is a game changer for Tesla.
Suggesting that Cybertruck is a game changer for Tesla is a huge call. It's also hugely on the money. I really genuinely do not believe people are understanding the massive impact Cybertruck will have in the coming years. My thesis is as follows. In my opinion, two major things will happen once Cybertrucks begin hitting roads. The most obvious, people who've never seen this thing before see what looks like a sci-fi from the future vehicle that's driven off a movie set, driving down the road and ask, what the f*** is that? That's a great way to garner interest and attention. Some of these people will eventually end up buying a Cybertruck. But in addition, once these things hit roads and more importantly work sites, people on work sites are going to show off what this thing can do. And I don't just mean in terms of towing, torque, speed, acceleration, blah, blah, blah. I also mean things like the onboard air compressor, the onboard power outlets, great for your tools, the near indestructible exoskeleton. There's going to be people on work sites smashing this thing with a sledgehammer going, look, it doesn't even dent, bang, bang, throwing rocks at it. This is what's going to happen. These things will sell themselves from multiple directions. One, looks weird, what is that? Let me learn about it. Oh, that's pretty cool. And the other thing, oh, what can this actually do? As I've mentioned in the past, Cybertruck is utilitarian as f***. Most consumers, most investors are being immediately put off by the aesthetic and thinking, oh, it looks weird, looks different, therefore no one's going to buy it. I beg to differ in a very big way. I will not be surprised if in the future, Cybertruck is a top 3, maybe even better, selling pickup truck in the United States. That would require annual sales of approaching 1 million units per year. Now, this may not happen, but I won't be surprised if it does, and I don't think it's going to happen tomorrow. Keep in mind, give or take, close to 1.5, maybe 2 million current pre-orders / reservations for Cybertruck. And that's before it's actually hit roads or work sites. Something to consider.
But also just production volumes continue to grow by an enormous amount. So when you look at all the different pieces of Tesla, and it's all kind of coming together along with full self-driving, full release by the end of the year, and I can tell you that the product's working very good now. What we see as we go into 2023 is a massive step up in Tesla's business that we're super excited for. And we're not even talking about energy storage and solar and charging stations. So Tesla continues to just, pedal to the metal, super bullish.
Yeah, understood. And trading right not too far off the lows that it hit recently of 202. It's trading at 213. I'm going to want to hear more about where you think this might be headed. Steve, you used to be a part of Tesla, right? Weren't you on the Tesla board? Or tell us what your link was and what you thought was interesting about this report, why it matters going forward.
You bet. We were one of the earliest investors at Tesla, and I served on the board for 3 years. So look, what they announced yesterday, record production, 340,000 units. They're on a path to 62% year over year revenue growth, $21.45 billion. I think they're going to hit 86 billion for the year, on track to 1.3 billion units sold. Compare that to Ford at 60,000 EVs and General Motors at 50,000. The gap here is not shrinking, it's getting bigger.
Very important observation there from Steve Wesley. The gap isn't closing, it's getting bigger. He is right. Tesla's lead is accelerating as the so-called competition are now attempting to catch up and actually moving in Tesla's direction. Tesla is increasing their pace, moving even faster and pulling further into their already unassailable lead.
But I think the real news is all these other companies have 1 or 2 facilities up and running. Tesla now has 4 plants in Fremont, Austin, Berlin, and an enormous factory in China with more on the way. What's interesting is Tesla seems to have solved the global supply chain issues, vertical agreements with other lithium-ion producers. It looks like pretty clear sailing for the next year. The big question is who's ever going to challenge Tesla? It looks like the Chinese may be the closest to doing it. We can talk more about that, but who's to argue with record deliveries, record profitability, record growth, and the biggest brand in the electric car industry when the entire industry is going all electric? Who wouldn't want to be in Tesla's shoes?
That's actually a great question. Who wouldn't want to be in Tesla's shoes? Let's start with automotive manufacturers. Can you think of a single automotive company on the planet, even though Tesla's more than that, a single automotive manufacturer on the planet who wouldn't want to be in Tesla's shoes versus their own shoes? Now, let's expand that question a little bit further. Can you think of any companies on the planet who wouldn't rather be in Tesla's shoes than their own? In terms of growth prospects, valuation, market opportunity, competitive advantage, I literally can't think of a single other company on the planet that wouldn't want to be in Tesla's shoes. Not one. Then again, maybe I'm just not that creative.
Would you say, and I understand it's been a clear leader, and Steve, you've been there since the beginning, and Ross has loved Tesla for as long as I've known Ross, but there is concern about demand, there is concern about fragmentation and other names in China.
Ross Gerber definitely didn't just laugh and eye roll at the idea that there were concerns around demand. If you think otherwise, you imagined what you just saw on screen very clearly.
For example, taking them on, Elon Musk playing down the demand worries. Steve, what say you?
Look, everybody wants to get an electric vehicle. They're wildly popular. Tesla has a backlog of 6 to 12 months. And again, they're the #1 brand. And if you look even globally, if you can imagine this, Tesla just passed the Volkswagen Golf, the iconic Volkswagen car, is the #1 selling vehicle in Germany. Not the #1 selling EV, the #1 selling vehicle.
Now, this is obviously nothing. I mean, a Tesla vehicle taking up the #1 spot for vehicle by sales, not the #1 EV, but the #1 vehicle in Germany before they've begun really ramping up volume production of their locally German-made Model Ys. I'm sure it's nothing. We still can't be sure if there's any demand or whether or not Model Y will soon be the world's best-selling vehicle by unit volume.
So Tesla's got a strong and growing international base. The other thing that's important to realize, and think about this for a minute, 27% gross margins, 13% net margins. The average auto industry is at 4.3%. So they're almost 3x the average profitability for the rest of the industry.
So if Tesla already at a relatively small scale versus some of the world's largest automotive manufacturers already has profit margins about 3 times greater than a typical automotive company, does this suggest that perhaps Tesla isn't just a car company? I mean, having 3 times the industry margin already at a small scale, is this a possible indication that maybe Tesla isn't just a car company and maybe they shouldn't be valued as one?
They're doing an awful lot right, but China is the key. BYD, a firm that most people in America don't even know yet, will sell close to 1 million units. They're going to give Tesla a run for the money. Elon's going to have to stay focused. I'm bullish on Tesla. We'll see.
Okay, Ross, what's your price target? Or I know you don't give price targets, but would you say this is a buying opportunity at current levels? And we're hearing a little bit about a buyback. How likely might that be too? And will that help the stock?
Well, I don't think the buyback is material. I think the story that Steve is laying out is what's material, and I think he's laying it out very well. That's why I like doing these shows with you, Steve. But you can look at Tesla from a valuation standpoint. We know that they're trying to grow by 50% a year annually as far as we can go. And then we know that they're going to do at least $4 this year, and it looks like at least $6 next year. So if you do 50 times the $6, you get $300, okay, for a Tesla share price. And remember, that's at a 1 peg rate, but earnings per share is actually growing faster than 50%. And so you're really looking at a below market multiple peg ratio for Tesla. It's almost like a 0.5 peg ratio. So in theory, Tesla stock could easily double just to get to the market multiple.
This is actually a very reasonable statement. I keep pointing it out. Now, Tesla's valuation now in terms of their future earnings potential, it's at a point where many people who hated Tesla stock, hated the valuation, hated the company, have got to be taking a second look going, wait, what? Penny hasn't quite dropped yet. Give it a few weeks, maybe a few months. I think the stock market's going to figure out what's happened here. The disconnect of all disconnects. I won't be surprised if, like Ross points out, Tesla stock doubles in a relatively short period of time as the market goes, oh, you wait, what? It's how cheap? Of course, who knows what'll happen.
So we think Tesla's worth between $300 and $400 a share in the current market, and the market is severely mispricing Tesla at the moment.
On that point, I wholeheartedly agree. His words, not mine. The stock market severely mispricing Tesla. Ross Gerber on the record believing Tesla stock today worth $300 to $400 per share. Let's do a quick sanity check. What about my own price targets, which are available exclusively on Patreon until I spoil them here in a YouTube video? My current 2022 bear case price target Tesla stock, $293 a share. Base case, $397 per share. So we're in the same vicinity, but Ross does skew quite bearish. I would say Tesla stock today probably worth $400 to whatever my bull case is. You'll have to join Patreon to find out. Card in corner, link in pinned comment.
What about the worries about Twitter, Ross, and how that may or may not fit in? Quick thought, quickly, Ross.
Well, there's only so much I can say because I'm involved with it, but the Twitter Tesla deal will be over in a week and we can move on, and it'll be a wonderful moment for Tesla shareholders and a very difficult time for Twitter employees. But I think this story will move on very, very soon, and I'm excited about that.
We had you on the show and you said Elon is serious about his offer. I remember when you said he's sticking to it, he's not bowing out. I remember very specifically when people started to doubt it, Ross.
Hilariously enough, there was a period of time when most of the clowns in the mainstream media were saying that Elon wanted to back out of this deal. He didn't want to buy Twitter. He thought he was overpaying. He was trying to find an excuse to get out of the deal. Not Ross, not this guy. It's been obvious from day one. Just listen to what Elon says. Free speech matters. Hello. That was literally all you needed to know. Elon believes free speech matters. Elon believes acquiring Twitter is a way to allow people to freely share their thoughts, opinions, and ideas, which they're currently not able to do. It's really that simple.
Final 10 seconds, Steve. Any last thought?
Look, Tesla is set up for a very strong next year. New products coming to market. The Semi and the Cybertruck will be huge. 1 million offers for the Cybertruck pre-orders. Expect a big year in 2023 for Tesla. Fastest growing auto company in the world. I think they'll grow 50% again, at least.
Tech company.
Ross Gerber.
Great place to end there. Ross Gerber correcting Steve Wesley. They're a tech company, not a car company, Steve. And I totally agree. Before I get out of here, don't forget I posted another exclusive video to Patreon today, an absolute monstrosity going deeper and deeper down the rabbit hole. Be warned, however, once you watch this video, there's no going back.